Friends, overview of IndAS and its relevance in business valuation. That is the topic that we have for our session today. What I intend to cover in this session with all of you. Number one, we would look at as to what is IndAS and why IndAS and how and for whom IndAS. Then for getting a good hold and good control on IndAS, which of course today all of us really need to have, because the way things are going, the way IndAS is being implemented, whether you are a chartered accountant, cost accountant, company secretaries, whether in practice or in service, doesn't really matter, is absolutely imperative that today we should have a very good understanding of IndAS. Otherwise, in the days to come, we would feel handicapped not only in practice but also in employment. And therefore, I have designed this program in a way so that you are able to get a complete overview of IndAS and make your own roadmap as to how to get a solid command on the IndAS. For getting this control, friends, what we need to do, number one, we need to look at the current roadmap for implementation of IndAS in India by different entities. Sanjay, you can mute him. Whoever is the person, please mute him. I'm sure you will have the control in your hand. Because it disturbs everybody. It not only disturbs me, it also disturbs everybody's concentration. Okay, so we first need to understand the current roadmap for implementation of IndAS by different entities. That is what we would discuss. Then we would look at Schedule 3 to the Companies Act. We would also discuss the framework for preparation and presentation of financial statements as per IndAS. Then we will have an overview of the entire canvas of Indian accounting standards. So there are all put together 39 accounting standards. What those 39 accounting standards are, what do they contain, and what are the purpose those 39 accounting standards have to serve. So we would understand that so as to gain a good control. Then we would also look at indices which are common to all entities. Please remember, friends, all put together there are 39 Indian accounting standards, 39, but all 39 are not applicable to all the entities. There are 20 of them which are applicable to all the entities in any case, and there are 19 of them that would be applicable only in certain cases. So we would not only look at as to what those 39 in accounting standards are, but we would also understand from the perspective of which are the ones which are mandatory to all and which are the ones which are applicable only in case of certain situations. And this way, friends, I am sure you can understand कि हमारा काम आधा हो जाता है. Our job is reduced to half, because out of 39 standards, what we really need to understand to begin with is 20 accounting standards. So we can focus on those 20 accounting standards first, and then we can think of covering the remaining 19. So I'm going to share that roadmap also with you. And the 19 which are applicable in specific situations, we would have a look at them. Then, friends, there are certain accounting standards which require fair value measurement. So we would also identify which are the accounting standards that would require fair value measurement. And why fair value? Why should we be interested in knowing which are the standards that would require fair value measurement? Because as the valuation professional, we have a direct interest, because we would come to know as to what is the scope for the professional growth for ourselves. Because all the standards that would require the fair value measurement, that means all of us have a role in those accounting standards. So we would also look at the accounting standards that specifically require fair value measurement. That means standards where you and I have a role to play. Then we would look at three of the standards which are commonly relevant for the purpose of valuation. And so number one is the impairment of assets, which is IndAS 36. We would also look at the business combination, which is IndAS 103. And then we would look at the fair value measurement, which is IndAS 113. So friends, this is the plan that I have with you for today. So as to give you a complete overview of the indices. It is my aim and objective कि ये program होने के बाद after this session you should feel fully confident as far as the indices are concerned. You should feel encouraged to delve deeper into it as far as the indices are concerned, because friends, I can tell you that indices as such have a tremendous scope for the professional growth, as the insolvency has a scope for growth, valuation has a scope for growth, IndAS also has scope for growth, for professional growth. As a matter of fact, if you ask me, it is much more challenging than insolvency, it is much more challenging than valuation, and therefore it has got much better scope than insolvency and the valuation professional. And this is what my objective is, to ensure that you get encouraged to get into it, and I'm sure you will not only find it challenging, demanding, but extremely rewarding as well. So let's begin with the first thing, and that is roadmap for implementation of IndAS in India. यानी कि हिंदुस्तान में, इंडिया में how are the indices being implemented? I have already told you there are all put together 39 standards. All these 39 Indian accounting standards are the adapted version of IFRS. So IFRS is the original global accounting standards. What we have done in India, we have adapted the IFRS, which are which are pronounced by the IASB, International Accounting Standards Board. In India, we have adapted them. And when I say adapted them, that means we have some changes here and there in all those 39 accounting standards so as to suit Indian requirements. So what is the roadmap for implementation of these indices in India? Let us look at that. So first of all, current roadmap for companies other than banks, NBFCs and the insurance companies. So the current roadmap for the companies other than the NBFCs, bank and the insurance companies, this is the roadmap. So the phase 1 started in India from 1st April 2015 or thereafter. It was on voluntary basis. So it was not on a mandatory basis, it was on a voluntary basis, just to let people test as to how the implementation of IndAS is going to happen in this country. From the 1st April 2016, the implementation of IndAS started in this country on mandatory basis. So what is the meaning of mandatory basis? That means all the companies listed or in the process of listing on stock exchange in India or outside India and having a net worth of 500 crore or more. For all such companies, implementation of IndAS became mandatory from 1st April 2016. From 1st April 2016. Number 2, all the unlisted companies. So please remember, it was not only the listed companies and who were having net worth of more than 500 crore were brought under the umbrella of compulsory mandatory implementation of IndAS. Even the companies, unlisted companies having net worth of 500 crore or more were also brought under the umbrella of IndAS mandatorily. That means for all these companies, all these two categories of companies, IndAS implementation became mandatory. And friends, please remember, when IndAS become applicable to a company as per the roadmap that I am discussing with you, then all the companies of such a company which are parent company, subsidiary company, joint venture or an associate company. That means all these 4 category of companies automatically fall within the ambit of IndAS. So that means if IndAS has become mandatory for company A, then the parent company of company A, subsidiary companies of company A, joint ventures of company A, associate companies of company A will also be mandatorily required to prepare their accounts as per the IndAS. And that is what we need to remember and understand. So that's your the first phase, and that is from 1st April 2016. Now friends, here we have to remember one more thing. And remember, when IndAS become mandatory from 1st April 2016, that means what? That means this company, when it would draw its financial statements on 31st March 2017, then the financials of this company for 31st March 2017 will have to be based on the IndAS. But remember, So not only the financials of 2016 and 17 will need to be based on IndAS, but the comparatives also will need to be based on IndAS. That means what this company will need to do, this company will need to redraw the financials of this company for the financial year 15-16, that is the previous year. For that 15-16, the company will have to draw the financials, which is again as per the IndAS, and that is what we need to remember. And remember friends, there is one more implication to it. And what is the implication? The implication is, if a company has to draw its financials as per IndAS for the previous financial year, that means the opening balance sheet of 1st April 2015 will also need to be as per the IndAS, because only when you have the opening balance sheet as per the IndAS, then only you can draw the financials for the following year. So that is what we need to remember. So practically, principally, IndAS is becoming mandatory for a company having a net worth of 500 crore or more, effective from 1st April 2016. But practically what this company will need to do, this company will need to prepare its accounts for the financial year 2015-16 also as per the IndAS. Plus, this company will have to draw its opening balance sheet for the financial year 15-16 also as per the IndAS. And remember, this is going to be applicable to all the situations that we are going to discuss now. So the phase 2 for the corporates, for the companies started from 1st April 2017. And that means from 1st April 2016, all the listed companies or the companies in the process of getting listed on the stock exchange in India or outside India were mandatorily required to maintain their accounts as per the IndAS. And those companies whose net worth was less than 500 crore but more than 250 crore, such companies, whether listed on the stock market or in the process of getting listed on the stock market in India or outside India, to such companies also effective from 1st April 2017, IndAS became mandatory. So that means what? Please remember same thing. Once IndAS becomes mandatory for a company, then the parent company of such a company, subsidiary companies of such a company, joint ventures of such a company, associate companies of such a company will also need to draw their accounts as per the IndAS. So this is your roadmap as far as the corporates are concerned. That means companies other than NBFCs and banks and the insurance companies. So what is the roadmap for the NBFCs? So the roadmap for the NBFC started from 1st April 2018. So 16 से चालू हुआ, 17 में कंपनीज के लिए हो गया, and now from 1st April 2018 it has started becoming mandatory for the NBFCs. So from 1st April 2018, all the NBFCs, whether listed or unlisted, having net worth of 500 crore or more, IndAS has become mandatory. And remember the same thing, parent company, joint venture company, associate company, subsidiary company, for all companies of such a company, such an NBFC, they also need to prepare their accounts based on the IndAS once it becomes applicable to one company. From 1st April 2019, so the NBFCs whose net worth was less than 500 crore but more than 250 crore, listed or unlisted, such NBFCs, IndAS became mandatory from 1st April 2019. And please remember something that I discussed in the context of the companies. So if IndAS becomes mandatory for a company from 1st April 2019, then 1920's financials will have to be as per the IndAS, of course, but the previous year's financials also will need to be also as per the IndAS. Even the opening balance sheet of the previous financial year also will need to be as per the IndAS. Why? Because unless you have the opening balance sheet as per the IndAS, you will not be able to draw your financials of the following year based on the IndAS. Now this is the roadmap, friends, that we have as far as the implementation of IndAS is concerned. Even the banks were to be covered under the IndAS from the current financial year, but for some reason implementation of IndAS or IndAS becoming mandatory for the banks has been postponed for the time being, And the obvious reason given is that the banks are not prepared for being able to implement IndAS in the banks. So as of now, it is not mandatory to the banks, and also to the it's not mandatory to the banks. Now here one thing that I would like to mention, friends, and that is, in case if a company is listed on the SME platform, then IndAS does not become mandatory to such a company, even though it is a listed company. So it is, IndAS is only for the main board company and not the SME board or SME platform of the stock exchanges. And that perhaps reason is because SMEs are still too small, and to burden them with implementation of IndAS may not really serve any purpose as such, and therefore the government has decided that the companies listed on the SME platform, even though they are listed as per the rules and regulations, yet IndAS will not be mandatory for such companies. Now friends, let's look at the Division 2 and the Schedule 3 to the Companies Act. Now friends, it's my very strong recommendation to all of you. Number one, please understand, IndAS is something that today we have to really get a good hold onto. And because in the days to come, if we are not IndAS savvy, then professionally we will feel handicapped, because progressively IndAS is going to be mandatory in India slowly, for practically, for virtually for all the companies. And therefore, number one, we need to understand the roadmap. Number two, what we need to do, and I would recommend to all of you very strongly, please do go through the Schedule 3 of the Companies Act, because Schedule 3 is a very important document as far as implementation of the IndAS is concerned. So what Schedule 3 would tell you? Schedule 3 would tell you the format of the P&L, the format of the balance sheet, the format of the cash flow statement. Okay, so the structure of the cash flow statement, and the instruction for preparation of the balance sheet and the profit and loss, and how to follow the indices. So all those instructions are given very comprehensively in Schedule 3 to the Companies Act. Everything has been well defined. So बैलेंस शीट का स्ट्रक्चर क्या होगा, कौन सा आइटम कहाँ पे आएगा, उसका क्या description है, all that has been given. So please do go through Schedule 3 of the Companies Act, and so as to be able to understand implementation of IndAS, so as to have a good command of yours as far as IndAS is concerned. So what the Schedule 3 would tell you, number one, it has a Division 1. And Division 1 talks about something which is applicable to a companies whose financial statements are required to comply with the accounting standards, which is the Accounting Standards Rule 2006. That means first category, Division 1, is applicable to those companies to whom IndAS is not applicable. What is applicable is existing Indian GAAP. Division 2 will talk about of the company to whose financial statements are drawn up as in compliance with the IndAS. And Division 3 will talk about non-banking finance companies whose financial statements are to be drawn as per the IndAS. So this is your Schedule 3, friends, and in brief I have covered here, because if I have to cover Schedule 3 in detail, perhaps we would need one full day, but I am sure you will do it by yourself, so as to ensure that you are absolutely comfortable in it. Third thing that we need to understand for getting a good control on IndAS is we need to go through the framework for preparation and presentation of financial statements as per IndAS. तो अगर आप जो IndAS का जो document है उसमें if you go, you will have the framework. Now remember, friends, this framework is very important. Because generally what will happen is, framework is something which is coming in the very beginning, before all the standards starts coming in. We would tend to think that framework is only like a prastavna, a preface, and therefore we do not have to worry about, we only need to focus on the standards. But let me tell you, if you want to have a good command on the IndAS, the framework is something that you must go through first, understand first. And why is that so? Because that's the mother document, that is the base document, that is like a lighthouse. The framework is so important that it is helping the accounting standards setting people, it is guiding them as to how to prepare accounting standard. It is guiding the people who draw the accounts as per the IndAS. It is guiding to the people who do the auditing of the financial statements which are drawn as per the accounting standards, Indian accounting standards. So even if I say accounting standards, what I'm meaning is Indian accounting standards. So that is the significance of the framework. So you must go through it, and it also highlights as to what is the purpose as far as the indices are concerned. What is the guiding force as far as the index are concerned? Friends, I can tell you, all 39 accounting standards, when you will go through, every accounting standard will tell you as to what is the purpose of that particular accounting standard. But remember, the broad purpose of all these standards is one and the same. The broad purpose for all the standards, all the 39 standards is same. What is that broad purpose? That broad purpose is anyone who is going through the financial statements of a company which are based on the indices, he should be able to figure out by reading the income statement, the profit and loss statement, he should be able to find out as to what is the performance of this business. So he should be able to judge, assess, evaluate as to how is the financial performance of this business from the profit and loss statement. From the balance sheet, he should be able to figure out how is the financial position of this business, of this company, whose financial statements he is reading, whose balance sheet he is reading. And number 3, from the reading of the cash flow statement, he should be able to figure out as to what is the company's ability to take care of its financial obligations in the times to come. Please remember, this is the guiding force behind all the accounting standards. क्या मतलब है इसका? इसका मतलब ये है, when you are either writing the accounts as per the IndAS or you are auditing the account as per the IndAS, what should drive you? What should drive you? What treatment should you give? You should decide the treatment based on this test. What test? Test number 1. By reading the P&L, the person should be able to know as to how is the financial performance of the business. By reading the balance sheet, the person should be able to know how is the financial strength of the business. By reading the cash flow statement, he should be able to know the ability of the business to take care of its obligations, financial obligations in the times to come. So this is all about your framework. But let me discuss some of the things, friends, which I am sure you will definitely find useful. So this is a framework is the foundation on which the building of IndAS is built. It is also the lighthouse of financial accounting and reporting. So you can pay attention. If framework is like a lighthouse. So how does the framework helps? And be clear about it. Be clear about it, because if you are clear about what purpose the framework helps, it will help you to capture the indices very easily. So the framework will help you. Number 1, it guides the authorities in setting the standards. Number 2, assist those preparing financial statements and auditors to interpret standards or deal with issues that are not covered by these standards. So if there is any requirement of any interpretation, so how to interpret an accounting standard, you go to the framework. Framework will help you in the right interpretation of any clause of any of these standards in case if there is any confusion. And remember, how will it decide? How will it clarify? The test which I mentioned to you. If it is income statement, the person is whatever treatment that you are giving, it should help the person evaluate the financial performance of the business. In writing the accounts, whatever treatment you are giving to a transaction, if it connects to the balance sheet, the person should be able to understand what is the financial position of the business. And likewise, the accounting treatment about which you have a confusion, how would you be guided by the framework? You just need to ask yourself, the treatment that I am giving to this transaction, will it help the reader of the financial statement to ascertain company's ability to take care of its financial obligations? and this is how you will be guided by the framework, by this test in preparation of your financial statements. Not only in preparation of the financial statements as per the IndAS, but also in the audit of the financial statements as per the IndAS. It sets out the key objective of financial statements, which I have just mentioned to you. It also defines assets and liabilities and relates them to other elements such as income and expenses. So this is the framework. What are the qualitative aspects of financial statements? And friends, please remember this slide that you are seeing on your screen is very important. Is very important. Is very important. And why it is important? Because ultimately this slide guides the writing of the standards. So when somebody is writing these standards, or somebody would have written these standards, whether all the 39 standards, this slide would have guided him in making those clauses in those standards. So what is the financial statements? What are the qualitative characteristics? So if you are responsible for writing accounts of a company, then what are the quality characteristics you have to take care? So there are 4 qualitative characteristics of the financial statements. That means any company which is making the financial statements will need to take care of these 4 characteristics. Number 1, understandability. That means whatever financial statements you are drawing, they should be understandable. If they are not understandable, doesn't really matter as to what kind of information you put into those financial statements, that information is of no use. So number 1, they have to be understandable. Number 2, relevance. So you may give a lot of information, but if that information is not going to help the user or the reader of those financial statements in taking an economic decision, then that information is waste of money, waste of time, and waste of resources. So therefore, when you are drawing your accounts, you have to ensure that the information which is being inserted in those financial statements is relevant. And how do you decide the relevance? Based on the materiality. What is materiality? Materiality means is it something that would help the person to take an economic decision based on reading of those financial statements. Number 3 is reliability. Obviously, so whatever information that you are giving in your financial statements, it has to be reliable. And finally, comparability. That means if you are giving the financials only of 1 year, it doesn't make much sense unless and until you also give the financials of the last year. So when you give the financials of the last year, then what happens? Then the reader of the financial statements is able to compare the current year's number with the last year's number and figure out as to how this company has done in the current year in comparison to the last year. And if his conclusion is that this company has done better than the last year, then obviously he would be inclined to take a favorable decision. So you have to look at the comparability also. Now, how to take care of the reliability? For reliability, you need to have the 5 tests. What are those 5 tests? The number 1 is faithful representation. That means whatever you are doing, you know for sure is correct. Substance over form. What is the meaning of substance over form? The meaning of substance over form is what is important is not how you are giving it. What is important is what you are giving. So remember, the form is not important. Substance is important. So how you are giving it is not important. What you are giving is more important. That is what you need to take care to ensure reliability. Neutrality. There should not be any kind of bias in giving any information. Prudence, of course, you have to think of future. And completeness, that means the information has to be complete in all respect. So friends, these are the qualitative characteristics which you have to bear in your mind as far as getting a control and hold on the indices. And I'm sure if you become clear, this is a statement of vision. Please remember, this is a statement of vision. This is a statement of vision. This is what is in the bottom of the indices. So all the accounting standards, whatever they are, whichever way they are written, all that is coming from here, and that is what you need to understand. Now, as per the IndAS 1, which is on presentation of financial statements, the IndAS 1 talks about what is the complete set of financial statements. So that means if you are responsible for drawing of the accounts of a company, or you're responsible for the audit of accounts of a company, or you are responsible for implementation of IndAS in a company, then you and I need to understand as to what would comprise complete set of financial statements. So the complete set of financial statements, remember friends, will have seven components. Seven components. And what those seven components are? Those seven components are: number one, balance sheet. Balance sheet as at the end of the period. In IndAS, we still call it balance sheet. In the IFRS, it is called as statement of financial position. So this is one change, that I was telling you, that in India, IFRS is adapted. Adapted meaning it is not picked up literally as it is. It has been picked up with some changes. So under the IFRS, so if you have a company, if any of your client has a subsidiary or a parent company which is in Europe, now they in Europe will call it as statement of financial position. In India, we would continue to call it as balance sheet, as we were doing all this while. Then you will, the second statement that would need to be there for your financial statements to be complete is the statement of profit and loss for the period. In India, we still continue to call it as profit and loss statement, and in Europe they would call it SOCI. SOCI is a statement of comprehensive income. In India,
So sorry for the interruption.
Yep.
Sir, actually your slide is not moving.
Not moving.
Yes, sir.
What do you see on the screen now?
What we will cover today is only this number PPT is showing.
Oh, still there. Oh, okay. Right. So okay. Let me try and relaunch it.
Okay.
Yeah, sure. No problem. Let me just try and do it. Thank you for reminding this. I'm really glad that you did it. Else, okay. Right. It's just disappeared. I don't know. Are you able to see it on the screen now?
No, sir. No, sir.
No? Okay. I really do not know why is that so happening. Maybe I would need to again disconnect and reconnect. Because the icon itself is not appearing here now for present now. Okay, so what I will do, I'm going to disconnect and reconnect once again. So hopefully that will solve the problem. Is it visible now to all of you?
Yeah, it's visible now.
Okay. Is it moving now? Is it moving?
Uh,
Is it moving?
no, sir. It's 16 number slides history.
Huh?
15 number.
What are you seeing on the screen now? What are you seeing on the screen?
15
Hello?
qualitative aspects of financial statements.
What is that you are able to see on the screen?
Qualitative aspect of financial statement.
Okay, why is stuck there only? I really do not know. Okay, but I think it's fine because uh, it should be okay because if it is not working, it is not working. And but I think I would try and explain to you as much as possible. Okay, so the second statement is the statement of profit and loss, which in the under the IFRS it is referred as statement of comprehensive income. In IndAS in India, it is still continues to be profit and loss statement. Then there is a new statement which is inserted as per the IndAS, and that is a statement of changes in equity. So we never had something called as SOCI. SOCI is statement of changes in equity. Now this is a new statement, and what this statement tells as to which are the changes in the shareholders capital. So on different accounts, what are the changes in the shareholders capital? Statement of changes in equity would reflect that. Then you have statement of cash flow, which of course is as per the IndAS 7, which all of us are aware. Number 5, it will have the notes including significant accounting policies and other explanatory information. So we all know, because significant accounting policies are part of the statements, financial statements in any case today also. Comparative information for the last year. And the seventh thing that needs to be there is a balance sheet as at the beginning of the preceding period. So in case if a company is making change in the accounting policy, then this company, besides giving the comparatives of the last year, will also need to give the opening balance sheet of the previous year. So these are the 7 things, friends, that would need to be there for a company to have complete set of financial statements. 7 things. So I'm repeating it once again, one by one, for the benefit of every one of you. What would comprise the complete set of financial statement as per the IndAS? It is number 1, the balance sheet. Number 2, statement of profit and loss. Number 3, statement of changes in equity. Number 4, statement of cash flow. Number 5, significant accounting policy. Number 6, comparative information. And number 7, opening balance sheet of the previous financial year, in case if company is applying any accounting policy retrospectively or making a retrospective restatement of items as per IndAS 8. So this is your complete set of financial statements. Friends, I'm really sorry, but I really do not know how to handle this, because I closed the system and still these slides are not moving. Is really sorry, but in any case, friends, any one of you who would be interested to get a copy of this PPT, I would be very happy to share with all of you. And anyone who wants a copy of this PPT can please send me a WhatsApp message. I will share my number at the end of it. You can please send me a WhatsApp message, and I would ensure that you get a copy of this PPT as soon as you send me.
Sir, can you mail this PPT?
No,
Can
I
you
will.
mail this
No, no,
PPT to me?
no. I will. Okay. So let's. You can send me a WhatsApp message, and I'll send it to you. Don't worry. Okay. So when will a financial statement of an entity shall be deemed to have been drawn up as per IndAS? Now, please remember, it is not enough for a company to draw the financial statements as per the IndAS. Not only they have to when okay. So a company to which preparation of the financial statement has become mandatory as per the IndAS. Not only they have to draw the accounts as per the IndAS as applicable, but they also have to make an explicit and unreserved statement in confirmation of compliance with the IndAS. That means a company जिसको कि IndAS has become applicable first time. So first time when this company is preparing its financial statement, in the notes to account, this company will have to make a statement that the company has complied with all the standards as applicable. That will be confirmation that these accounts are IndAS complied. Okay, now friends, what I'm going to share with you is the IndAS roadmap for preparation. So what I can do is I can disconnect once again because here I would like all of you to have the screen in front of you. Okay, are you able to see this? Anyone? Can you please confirm? What do you see on the screen now? Anyone, please confirm. What do you see on your screen now?
Yeah, it's IndAS roadmap for presentation.
Fantastic, very good. All right.
IndAS roadmap.
Good. So I suppose you are able to. I suppose you are able to read it also.
Sir, put it in presentation mode, please.
Yeah. Okay. Okay. Good.
Put it on the presentation mode, please.
Sure. Are you able to see it now?
Yeah, thank you.
Are you able to see it? What do you see on the screen?
Yeah.
Okay.
Yes.
Okay. Good. Okay. So.
IndAS roadmap for presentation.
Very good. Very nice, friends. Very good. So now remember, what I'm going to do is, with a view to give you a complete overview of the IndAS, all the 39 IndAS, I have divided them into three parts. So number one, there are 15 accounting standards which relates to presentation and disclosure. Then there are certain standards that relate to the P&L and the balance sheet, and there are certain standards that relate to the consolidation. So what I am going to discuss with you, friends, to give you a complete overview of all these standards. My aim and objective is कि आज आपके दिमाग में, आपके जहन में, आपकी मेमोरी में ये सारे standards इतने मजबूती से बैठ जाने चाहिए. All these standards should get fixed in your memory so strongly that you should really feel, okay, yes, today I know what these standards are. So let's look at the first thing first, standards which relate or deal with presentation and disclosure. So the first one is IndAS 1, which is on presentation of financial statements. So IndAS 1, which is on presentation of financial statement, tells you what? It tells you how is the balance sheet to be presented, how the P&L is to be presented, how the statement of changes is to be presented, and how other disclosures are to be presented in general. That will come from IndAS 1. IndAS 7 is about statement of cash flow statement. All of us know that the companies to which IndAS is mandatory, and otherwise also companies are supposed to show in the financial statements statement of cash flow, and this statement of cash flow is to be prepared as per the IndAS 7. IndAS 7 would differentiate the cash flow in three categories: cash flow from the operating activities, cash flow from the investing activities, and cash flow from the financing activities. So that's your IndAS 7, which is only a presentation and disclosure standard. I'm sure you can understand. So when I'm explaining all these standards with all of you friends, please understand where is the focus of these standards. The focus of these standards that I'm discussing with you now is on the presentation and disclosure. Presentation and disclosure. IndAS 8 is about accounting policies, changes in accounting estimates, and errors. IndAS 10 talks about events after the reporting period. IndAS 24 is related party disclosures, only disclosures, nothing else. IndAS 29, financial reporting in hyperinflationary economies. Now I have marked it red because generally this standard will not be applicable as far as we in India is concerned, because our economy is still not a hyperinflationary economy, but there is a standard for that purpose also. Indus 32, very important. It is about the financial instruments presentation. Very important, very complex, very complicated, but very interesting at the same time. That is Indus 2. It talks about the financial instruments. Please remember, for the valuers, for the valuation professionals, Indus 32 is very important. Indus 32 is very important. Indus 107 is very important. Indus 109 is very important for the valuation professional. If you really want to do good valuation and do good for yourself in terms of the professional growth, you got to have a good control on Indus 32, Indus 107 and Indus 109, because many of the companies to whom the Indus has become mandatory, they would require lot of fair value measurement as per Indus 32, 107 and 109, and that means they will need to approach a registered valuer like you and me, and you and I can do the valuation as per Indus 109 only if you and I understand Indus 109. So that's your Indus 109, Indus 32, Indus 107 are in the same bracket. So they are part of the same group which relates to the financial instruments. Then Indus 33 is about earning per share. I am sure you can understand it is only about the presentation, only disclosure, nothing else. Indus 34 is about interim financial reporting. So if a company has to declare the quarterly results, half yearly results, or the company may require to submit the financials as per the SEBI disclosures or anything else. How those interim financial reporting will have to be done is governed by Indus 34. Indus 102 talks about the share-based payments. Indus 105 is about non-current assets held for sale and discontinued operations. क्या मतलब है इसका? इसका मतलब ये है, a company has decided to dispose of a plant of its, a complete division of it, a complete unit, complete plant, company has decided to sell it off. So the moment company decides to sell it or sell a complete plant to somebody, remember, this plant will cease to appear as the fixed assets in the balance sheet of the company. Why? Because now that company has taken a decision to dispose it off. That means it is no longer a fixed asset for the company. As soon as the company gets a customer, company will sell it off and get the money. That means this will be shown separately in the balance sheet under the heading as non-current assets held for sale and discontinued operation. And remember and pay attention, it will be shown under the current assets. Even though it is a fixed assets, the plant is a fixed asset, but as per the Indus, it will appear as assets, non-current assets held for sale and continued operation, and it will appear in the bracket of current assets. So that's your Indus 105. Indus 106 is about exploration and evaluation of mineral resources. Specific है, not applicable to all the companies, but there is a specific standard in case of the exploration companies. Indus 107 is financial instruments disclosure, very important for the registered valuers, very important. Indus 108 is about the operating segments. I am sure you can understand operating segments के result are to be disclosed separately. So obviously it is what? It is again a standard which is for the purpose of disclosure and the presentation. Then Indus 114, which is about the regulatory deferral payment. So in case if a company is into the products or services where the prices are regulated, in those cases only this Indus 114 will be applicable. So friends, these are the standards which will fall into the category of presentations and disclosures. Let's go to the next category. The next category is of the standards which will impact the balance sheet and the P&L. Remember, the one that we have discussed now, the 15 standards that we have discussed now will impact only the presentation and the disclosure in the balance sheet and P&L. But the ones that I am discussing with you now will impact the P&L of a company, will impact the balance sheet of a company. Which are those standards? Let's look at them. So these are the ones. Indus 2 about the inventories. Indus 12 about the income tax. Indus 16 about the property, plant and equipment. Indus 19 employee benefits. Indus 20 accounting for government grant and disclosure of government assistance. So whatever the grant that company may receive, how will they need to be accounted, will be part of IndAS 20. IndAS 21, the effects of changes in foreign exchange rate. So in case if there are foreign exchange rate changing, and if a company is having foreign operations in some way or the other, then those since the company is involved in the foreign currency transactions, and the currency rates are fluctuating, that means those impacts will need to be factored into the financial reporting, and for that there is a separate standard which is IndAS 21. IndAS 23 is about the borrowing cost. So up till the time when you are borrowing for constructing a qualifying asset, till the time that asset is under construction, the borrowing cost on that debt is eligible for capitalization, and that is your IndAS 23 borrowing cost. It will have the impact on the P&L, it will have the impact on the balance sheet. IndAS 36, impairment. I am going to discuss it in much more details before we close the session today. Hopefully that we have enough time for that. IndAS 37 is about the provisions and the contingencies. IndAS 38 is about the intangible assets. Please remember, friends, intangible assets are very important. Very important. Now, typically people would think that globally all the companies would run their operations based on the tangible assets, plant and machinery, building and things like that. But the fact of life is, globally most companies would be using intangible assets much more than the tangible assets. Interesting part is that in most of the cases, many of the intangible assets, though they are there, they are not reflecting in the balance sheet of a company. This is the most interesting area, and therefore those of you who are the registered valuer for financial assets and the securities, you have a very important scope here for the valuation of intangible assets. So IndAS 38 deals with the intangible assets. IndAS 40 deals with the investment property. Again, a specific standard may not be applicable in all the cases, but we need to know. IndAS 41 about agriculture. So again, a specific standard, we may not be needing it for our clients, but in case if somebody has an agriculture company, then that he would need to be aware of IndAS 41. IndAS 101 is about first time adoption. So when a company is for a company, IndAS is becoming mandatory first time. Now there is a separate standard which is IndAS 101, which is IndAS for adoption, first time adoption of IndAS. So obviously you can understand what this IndAS would talk about. This IndAS would talk about of all the exceptions, all the exemptions which are available to a company which is adopting the IndAS for the first time, and why those exceptions, why those exemptions, so that for this company adoption of the IndAS first time becomes easy and the journey forward becomes simple. So that's your IndAS 101. Then you got IndAS 104, which is on the insurance contracts, specific particularly for the for insurance contract, and IndAS 109, financial instruments. And friends, this is what I will very strongly recommend. Now this IndAS is almost about 120 pages. So I would very strongly recommend to 120 pages or thereabout. I would very strongly recommend all of you who are registered valuer for SFAs, securities and financial assets, all of you must have a good grounding in the IndAS 109, because lot of your valuation assignments will be linked with IndAS 101, and believe me, it's a phenomenal area for the professional growth. So it's IndAS 101. All those who are registered valuer for the financial securities and the assets should really get a good control on financial instruments. IndAS 113 is on fair value measurement. Of course, fair value measurement is in the base of the IndAS. So I'm sure all of us know that all before the IndAS, before the IFRS, the financial statements were based on the historical costing or historical cost. Not anymore. Today, under the IFRS or under the IndAS, the focus is on the fair value measurement. The focus is on the fair value measurement, and please understand why is the focus on the fair value measurement, because if your balance sheet continue to show the assets on the old price, is your balance sheet really telling the correct situation? Answer is no. And therefore, if the balance sheet has to give the correct position, then the balance sheet has to show all the assets and the liabilities at the fair value. What is the fair value? Fair value is the value of that asset, of that liability on the date of the balance sheet. And then only your balance sheet will reflect the true and fair position of the financial strength of that company. And so IndAS 113 is on fair value measurement. And remember, all of us have to be very good in IndAS 113. And today, of course, we will spend some time on IndAS 113 and cover it. Then you got IndAS 115, which is revenue from contract with customers. So earlier you had IndAS 18, which was on the revenue. Now IndAS 18 has been withdrawn and has been substituted by IndAS 115, which is revenue from contract with customers. Can I request please mute yourself, because your somebody's speaker phone is unmuted and that is disturbing everybody. Sanjay, can you please take care of this? Okay, thank you, thank you. And then you go to IndAS 116, which is on leases. Okay, so these are the friends, the standards, 18 of them that relate to the balance sheet and P&L. That means all these 18 standards, I'm sure as you see them and as we are discussing them, you can feel that these 18 standards will impact the balance sheet of a company, will impact the P&L of a company. And let's come to the last category, and that is consolidation. So now these are the standards that would be touching the consolidation. So consolidation meaning in case if a company has got the parent company, subsidiary parent company, so a parent company will need to consolidate the results of the subsidiary company, associate company, joint venture company. So you have 6 standards dealing with the consolidation. So you have IndAS 27, which is about the separate financial statements. IndAS 28, which is investment in associates and joint ventures. So in case if a company has made investment in associates and in joint venture, then how that investment in the joint ventures and the associate company will need to be shown in the financials of the company. IndAS 103 is about the business combination. So what is business combination? In case if a company is going for merger, takeover, acquisition, slump sale, or whatever. So whenever there is a business combination, that means whenever there is a change in the structure of a company, either by a merger, amalgamation, takeover, acquisition, spin-off, whatever may be the slump sale, whatever may be the form of the business combination, all those things are covered under IndAS 103, which is on business combination. IndAS 110 is on consolidated financial statements. So that means a company which is a parent company will have to prepare the consolidated financial statement. And I'm sure friends you can understand, if a company is having 100 subsidiaries or 20 subsidiaries or 10 subsidiaries, now if I look at the balance sheet and P&L of that company on stand-alone basis, I will not be able to come to a right conclusion about the financial position and the financial performance of that company. Why? Because this company, which is a parent company having subsidiaries spread all over the globe, I will be able to judge the financial position of this company only when this company's results are consolidated. That means the income and the expenses and the profit and the losses of all the subsidiaries of this company are consolidated with this. So that is your IndAS 110, which is on consolidated financial statements. Consolidated financial statements give you a real view about a company's financial position and its financial performance. Then you got IndAS 111, which is on joint ventures, and IndAS 112, which is disclosure of interest in other entities. So friends, these are the 39 accounting standards. Now, really speaking, for all of us to be good in the IndAS, we really got to have a good understanding of all these 39 accounting standards. And believe me, today, Indian accounting standards by itself is a fantastic growth area for the professional, because there are very few people who are available in the whole country who really have a very comprehensive understanding of all these standards. And therefore, anyone who enters into this field will do very good for himself. He will be so much flooded with the assignments that he will not know what to do. Maybe he will need to hire a lot of people. Okay. So, number one, there are totally 39 accounting standards that we need to know. The good thing is that all 39 accounting standards are not applicable in all the cases. So, what we need to do, we need to look at which are these accounting standards which are applicable in all the cases. And the good news is there are only all put together 20 Indian standards which are applicable to all the companies in this country. And remember, when I say all the companies, that means all the companies to whom Indian standard accounting standards have become mandatory. So, really speaking, to begin with, what all of us need to do, all of us need to focus on these 20 standards, and the remaining 19 standards we can do it in phase 2. So first phase, let us focus on the Indian accounting standards, which are just 20. And what are those? Very quickly. So as far as the presentation and disclosure is concerned, IndAS 1, which is IndAS, which is on the presentation of financial statements. IndAS 7, statement of cash flow. IndAS 8, accounting policies, changes in accounting estimates and errors. IndAS 10, events after the balance sheet reporting date. IndAS 24, related party disclosures. IndAS 32, financial instruments and presentation. IndAS 33, earning per share. IndAS 34, financial interim financial reporting. IndAS 107, financial instruments disclosure. So 9 standards you and I need to have a good understanding, good hold for from the perspective of presentation and disclosure. Which are the ones that will have an impact on the P&L and the balance sheet? So the one IndAS 2, which is on inventory. IndAS 12, income tax. IndAS 16, property, plant and equipment. IndAS 19, employee benefits. IndAS 23, borrowing cost. IndAS 36, impairment. IndAS 37, provisions and contingencies. IndAS 101, first time adoption. IndAS 109, financial instruments. IndAS 113, fair value measurement. IndAS 115, revenue from contract with customers. So friends, as part of the phase 1, for all of us to get a control and handle on the indices, what do we need to do? We need to focus on these 20 standards. Consolidation is applicable only in those cases where there are those kind of transactions. So that can come as the second part. Now, I'm not going to discuss this slide with you, friends. And why I don't intend to discuss this slide with you? Because, okay, can somebody confirm if you can see this slide on your screen, please? Anyone? Sanjay, can you please confirm what do you see on your screen?
Cannot see.
Okay, no worries. Okay, can you see it now?
Not yet.
So what do you see on the screen?
No, we are seeing you, sir. That's all.
Okay, all right. So no worries. I will reconnect. I think I will have to once again disconnect and reconnect. So no worries. I will disconnect and reconnect. And
So your voice will start breaking if you disconnect. That is another problem.
I know, I know it's a very interesting scenario, and this is how the technology is. Okay, but we have no choice. I think I'll disconnect quickly and come back.
Okay, sir.
Yep. it's really unfortunate, but then I'm trying to share the.
Sorry, my mic is mute.
I'm trying to unmute myself.
Unmute, sir. You have muted.
Yeah, okay. No, I was just trying to do it. Uh, it's really strange because when I'm trying to share the PPT with you, that PPT is not appearing only in that box. So uh, I think Google has problem. My experience with Zoom is much better. Zoom is much better. Let me disconnect once again. Sorry friends, I'm trying to. I'm sorry, I'm trying to share the presentation, but it's not coming. It's not coming. Are you able to see the PPT?
No, sir.
Yeah, it's but strange. Okay, friends, looks like it's not working, but doesn't really matter. Okay, so what we have covered so far are the 39 accounting standards, and then we understood as to the standards which are uh, applicable in all the cases, and those are 20, and 39 standards are the ones which are applicable in case of specific cases. And therefore, as registered valuer, as practicing professional, we need to focus on those first 20 standards that I have just shared with you. The remaining 19 we'll do as part of the phase 2. Okay, now let's move on because we have a less time left, and in any case, would like to. Okay, now let me share with you, friends, the indices which require fair value measurement. So there is Index 29, which is financial reporting in hyperinflationary economies, will require fair value measurement, but it's not really speaking applicable as far as we are concerned. Index 102, which is share based payments, which is on share based payments, will require fair value measurement. That means you and I have a role to play in Index 102, which is on share based payments. Then Index 106, property, plant and equipment. Those of you who are registered valuer for property, plant and equipment will the Index 16 on property, plant and equipment will involve fair value measurement. Likewise, Index 19 on employee benefits, Index 20 on accounting for grants from the government, Index 21 the effects of the changes in foreign exchange rates, Index 36 on impairment, Index 37 provisions and contingencies, Index 38 intangible assets, Index 40 investment property, Index 109 financial instruments, Index 113 fair value measurement, Index 115 revenue from contract with customer, and Index 116 which is on leases. All of them will require fair value measurement, right? That means companies to whom the index have become mandatory, those companies will have to take help of a valuation professional for giving them fair value measurement as per these indices. That means it basically means that these indices offer good professional opportunity for all of us. As far as the consolidation is concerned, Index 28, which is on investment in associates and joint venture, will require fair value measurement. Index 103, which is on business combination, will require fair value measurement. Index 111, which is on joint ventures, will require will require fair value measurement. Index 112 will also require disclosure, which is on disclosure of interest in other entities, will also require fair value measurement. So friends, that means all put together 19 standards would require fair value measurement. Out of them, some of them are not applicable, like Index 29, which is on financial reporting in hyperinflationary economies, but 18 standards require fair value measurement. That means there is so much of a scope for we the registered valuer, and that is what we must explore. Now friends, let me take you to the specific these standards in Index 36, which is on impairment of assets, and Index 103, which is on business combination, and Index 113, which is on fair value measurement. So let's look at first the Index 36 on impairment. What is impairment? First of all, let's understand. So impairment simply means or let me start slightly differently. What is the purpose of the financial statements? The purpose of the financial statement is that they should give the information which is current, not outdated. So it is possible that in case of a company, for various reasons, the real value, the realizable value, the recoverable value of a property, plant and equipment may have come down as much as less than the carrying amount. For example, a plant and machinery is carried in the balance sheet at 100 crore. But today, if you go and sell this plant and machinery, you will get only 80 crores. Number two, from the use of this plant and machinery, what you will get in terms of present value is only 70 crores. So you will recover 80 crores by selling the assets. You will be able to recover 70 crores by use of the assets, and you are carrying the assets at 100 crores in the balance sheet. Is it right thing to do or wrong thing to do? Obviously it is wrong thing to do. Why? Because though you are carrying the plant and machinery in the balance sheet at 100 crore, But is that plant and machinery really worth 100 crore? The answer is no. How much it is worth it? It is worth it higher of the realizable value or the value in use. How much is the realizable value? 80 crore. How much is the value in use? 70 crore. So whichever is higher, that is the real value of this asset. So between the 70 crore and 80 crore, higher is 80 crore. So 80 crore is the real value of this asset. So what you need to do as a company, as per IndAS 36, what you need to do is you need to restate the value of this asset in the books from 80 crore to from 100 crore to 60 crore, and the difference of 20 crore will have to be taken in the P&L as impairment loss, and that is, friend, your IndAS 36 is all about. So now the question is, how do you calculate the value in use? So what is value in use? No rocket science. Value in use simply means how much value you will get from the use of this plant and machinery. And what is the value that you will get from the use of the plant and machinery is nothing but the present value of the future cash flows. So what you need to do for finding out the value in use, you need to calculate the cash flow projections from the use of the assets, convert them in terms of present value using an appropriate discounting rate. Add all these present value together, and that's your value in use. So that's your impairment, friends. And the question that can come to your mind is, can the impairment loss reversed? And the answer is yes. So that means in case for some reason there is a impairment loss in the current year, and for some reason this impairment loss is recovered in the next year. So to the extent the impairment loss that you have taken in your books, to that extent you can reverse the impairment loss. You cannot recover it more than what you have recorded in your books. So that is very much possible. Now the question is, when should you do the impairment test? Now really speaking, as and when as a company, as per IndAS 36, as and when as a company, whenever you realize that any of the property, plant and equipment has gone down in terms of value, and you must do the impairment test at that time. For the goodwill and the intangible assets which have indefinite life, now all these goodwill and the intangible assets will need to be tested for impairment every on annual basis. So whenever you are writing your books of accounts, that time you have to do the impairment test of the goodwill and the intangible assets. Which are the indicator of assets impairment? कैसे मालूम पड़ेगा आपको कि this company has this asset has a impairment? So decline in the market value of similar assets can be a good indicator. Suboptimal demand for the goods produced can be a good indicator. So evidence of obsolescence and physical damage in an asset in plant and property, plant and equipment is again an indicator of the impairment. So this is how, friends, you will find out the impairment which is as per IndAS 36. Now I would have loved to do an exercise with you, but unfortunately the slide is not getting exhibited, so therefore we will have to skip this exercise. But in any case, those of you who wish to have a copy of these PPTs, please send me a WhatsApp message and I'll share my WhatsApp number with you, and I would be happy to share the copies of these PPTs with you. And in case if you have any question, I would be able to even respond to your queries also. Then we look at the IndAS 103, which is about the business combination. Now, friends, in case of IndAS 103, which is on business combination, one thing that we need to understand is the purchase price allocation. Now, what is purchase price allocation? That is where we as the registered value have a role to play. And what is the role that we have to play? Please remember, whenever there is a merger happening of one company with another company, what is happening? That acquiring company is being transferred to the acquirer company. So the acquirer company is making a payment of consideration to the acquiree company. as a result of this consideration, the assets and the liabilities of the acquiring company are becoming the assets and the liabilities of the acquirer company. Now this price, this purchase price has to be allocated. Allocated on what? Allocated on the assets and the liabilities that have come to the acquirer as a result of the acquisition. Indus 103 talks about this price allocation. So how do you do? And remember, that is where you and I have a role to play as a registered valuer for securities and the financial assets, and for the plant and machinery, and for the land and building. Why? Because the acquirer will have to ascertain fair value of all the assets which it has got as a result of the merger or the acquisition. यानी कि जो एक्वायरी कंपनी है उसकी जो सारी एसेट्स हैं, सारी लाइबिलिटीज हैं, all those assets and liabilities will need to be measured for the fair value. Who will do it? You and I will do it. So number one, we will do that and tell the company this is the fair value of these liabilities and these assets. Now how this company will do the price allocation as per Indus 103? So this company firstly will find out all the tangible assets and ascertain the fair value of all those intangible assets and allocate the price based on the fair value of all the tangible assets. Now let's say, for example, the total consideration paid is 100 crore and the value of all the tangible assets is, let's say, 70 crore. So now the remaining 30 crore has to be allocated. So what this company will need to do? This company will need to find out, have we got some intangible assets? And if we have got some intangible assets, those intangible assets will need to be measured for fair value. So somebody like you and me will have to do that for the company. And let's say that the value of fair value of the intangible assets which have come is coming to 20 crores. So 80 crore, 70 crore is the value of tangible assets, 20 crore is the value of intangible assets, and the 10 crores that remains is supposed to be the value on account of the goodwill. And this is, friends, is your purchase price allocation as per Indus 103, and that is what we need to understand, because that is where we have a role to play. And then we come to Indus 113, which is fair value measurement, and remember that is the fundamental. I am sure every one of you would be very strong in any case as far as the Indus 113 is concerned, because remember, Indus, the foundation of the Indus is on fair value. And please understand, don't understand it theoretically, understand it practically. Why is the foundation of the Indus on the fair value? Because now the thought process of the accounting setting bodies is changing from the historical accounting to the fair value accounting. And why they are changing from the historical accounting to the fair value accounting? Because if the values of the in the balance sheet of the assets are given at the historical price, anybody who is reading the balance sheet will not really be able to know the real strength or the weakness of the company. So if you convert those assets into the fair value, then you would be able to really and if the balance sheet is prepared based on the fair value, then you will know as to what are the strengths and the weaknesses of that balance sheet. So friends, that is your Indus 113. We have a limitation of time, and I would not like to exceed the time. In any case, it's already 8:29 in my watch. And so friends, with this we come to the close of our discussion. In case if there are any questions, I would be very happy to take them. So thank you all the participants and the RVO of ICMAI for giving me this opportunity to interact with all of you. Thank you so much. Wish you all a wonderful time, great times as valuation professional. You all do well and add tremendous value to the economy. This is my sincere wish and the best wishes to all of you. So thank you so much, everyone. And now I hand it over to Sanjay. Sanjay, back to you once again. Thank you.